Hi everyone, no major news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So looking at fear and greed, markets continued to dip down here. You can see we finished at a 31 for the week. Previous week was a 46, yesterday was a 34, and you can see neutral here, fear in strength, fear in breadth, extreme fear on the put call ratio, as well as market volatility, safe haven demand, also extreme fear, and it's interesting to see junk bond demand continuing to hover even as markets continue lower. Looking at the earnings calendar, you can see just about everyone beating on the top and bottom line. Procter & Gamble missed on revenue by a little bit, but not by much. And so far, earnings have actually been quite good. Moving over to max pain, we finished way below max pain. So this is a very bearish finish. You can see down around that 495 area. That is effectively the bottom of the calls here. Finished well below that 500 put wall, which came down a little bit on the session, not much. And then the next one was down around 490. You can see a smaller one around 495, but the bottom of the calls is where we ended up finishing. So very bearish finish, and we'll see if that continues to play out for next week. And we'll take a look at the max pain chart for next week in the Sunday video. Moving over to the charts, you can see it was another dumpster fire. We were down 0.87 on the day. Way better here on the SPY than we were on the NASDAQ today. And you can see pretty good volume coming through on that candle. Pretty interesting. Right at the major trend line. Let's go full screen on that. And we'll take a closer look at these on the Sunday video, but you can see very important trend line. We've pulled back to the level, critical zone. If it's going to bounce, it really needs to do it here. Otherwise, you're looking at the 144 EMA all the way down at 473.95. And then looking at the 4-hour chart here on the Tasty charts, you can see same concept, continuing to grind along that lower ATR. We thought we saw a little bit of a bounce here, but then we continued lower, hitting that lower ATR again. And that continues to be where we tend to find support, which right now is at 492.40. Moving over to the Qs, continuing to dump here as well, over 2%. But again, you can see that trend line. We're right in that zone, needs to hold. If it doesn't hold right here, it's going to be bad. You can see volume on this candle coming through quite powerfully. Still down a little bit after hours, but not a lot. Critical zone, the level right now, 412.75. Seems like just a day ago we were up in the 447 area, but right now we're down around 414. Critical zone, like I said, needs to hold. And look at the volume on that last hour of the day. Lots of buying volume closing out the candles for the week, which does give you maybe a thought that we could go higher next week. Moving over to the Russell and the Dow, both of these actually turned a profit on the day, 0.16 and 0.52. We talked about the Dow consolidating for 3 days and starting to turn up on momentum. This is starting to look better. Positive day over 0.5%, 9 EMA got tagged. See if this pulls back to the 21. And then you can see similarly on the Russell, we got that first step down on daily momentum. Could start to look for that bullish push at least a little bit, maybe back into that 201 area, close to that 21 EMA. But right now, these both seem like they've kind of bottomed out on the oversold readings and like they're going to push a little bit higher. And they both look better than the SPY or the NASDAQ. Moving over to the MAG7, massive down day here. You can see we were at that 55, needed that to hold, but we gapped through it and fell down over 5%. Trend line, just a few dollars lower at 320, need it to hold. Otherwise, we're pushing down to 308 and then potentially the 144 all the way down at 297. If that happens, markets are going to be going way lower. You can see RSI here at 31, so not quite oversold yet. Probably going to tag that trend line, and then we'll see what happens from there. Moving over to Apple and Tesla, we talked about the MAG7 being a dumpster fire, and both of these were not great here today either, 1.22 and 1.92 to the downside. Apple has now broken this level, so we took out the 165 level. Now we're going to see if my thesis is correct. I said if this area breaks, there's going to be basically no support until that 154 area, so this could be pushing down for about another $10 from current price. And again, that's going to be terrible for markets if it does follow through on that move. Looking at Tesla, we talked about this down move, bear flag down move. So the price target for that is right around 125 right now. And we also started to touch these wicks back here from January of 23. So we got a wick closure. I like to see it touch the body of the candles. That hasn't happened yet. We also extended out this trend line. Let's go a little bit further with that. Probably going to touch the trend line, probably going to fill these gaps. So a little bit more downside here on Tesla is likely. Moving over to Amazon and NVDA, both of these dumping as well, 2.56%, and then NVIDIA down 10%. Massive move. We talked about the 55 EMA. We talked about the trend line yesterday. Gapped through the trend, then broke through the 55, and then your next level was 741.65, and we are not quite there yet, so you would expect a little bit more downside. Trend line right there. If that zone breaks, this has a lot of downside potential. It's been a massive run, but you can see huge volume, huge bearish momentum on both of these. Moving over to staples and discretionaries, we talked about this setup. So staples broke higher as you would expect, almost 1% higher. Momentum continuing to roll to bullish, took out the 74 level. We talked about this zone in here at 74.60 being the consolidation of EMAs as a price target. Hit the highly traded zone. Next level, if those break, would be 75.40. And then you can see discretionaries tagged the 200 yesterday, gapped through that level. Took out the 170.68 level. So now for support, you would have 166.78. And you can see we actually hit oversold conditions here on the RSI as well at 29.50. So maybe we see just a little bit more downside to kind of culminate this move. It's been a big one. We're down from 185 all the way to the 170s pretty quickly. But like I said, I think there's probably a little bit more room. Looking at breadth continued higher. We talked about it yesterday, looking good. Momentum continuing to roll to bullish. So it does seem like we're coming to the bottom of this move. We're just kind of waiting for breadth to kind of pick up a little bit. And both of these look good at this point. 20-day back above 20, looking for this to push back to the 50 area. And then similarly on the 50-day average, back above that 32 level that we broke. And right now this looks like it's going to push to that 62 area. You can see that consolidation of EMAs. That's typically where you start to see a little bit of resistance. Moving over to the dollar, you can see the dollar is still hovering at resistance. Seems like this is going to roll over. Momentum has been fading, RSI going lower. We're just kind of waiting for that to happen. And once it does, that should be bullish for equities. Moving over to bonds, you can see J&K similarly to the Russell and the Dow, gapping higher and rallying right to that 93 level. Still important. Momentum rolling to bullish. And then you can see TLT basically unchanged on the day, slightly bullish. 0.36 right on the level, 89.16. Closed 1 penny below it. And it's down a little bit after hours, but this is encouraging here on J&K. It seems like we're going to get at least a slight relief rally. Doesn't mean we're going to break higher, and I think we're probably going to see a lower high setup, but does seem like a relief rally is coming. Moving over to volatility, you can see bond volatility staying low. Seems like bonds are about to find a little bit more strength. And then you can see VIX getting all the way up to 21.36. Almost hit this trend line here. Over through these medium trend lines. 22.5 is still a level up there that's possible. Talked about this showing a little bit of weakness over the last few days. Still said it was possible to get to that 20 area, and we did. Now, is this the top? Maybe. I think 22.50 certainly possible. Maybe we get one more day of downside, kind of top it out here. But right now the VIX looks bullish. And like I said, I think we'll see probably 1 or maybe 2 more days of bullishness on the VIX, which means bearishness for equities. Moving over to my accounts, you can see I did lose a little bit of money. I was still trying to hang in there on a neutral position, and I did readjust. You can see I'm now down out to 10 days from now at 415. Had to pay a little bit to do that, which is not great. But so far that's working out. $6 credit for that. And like I said, I think we get maybe 1 or 2 more days of downside, and then we start to see a relief rally, which should put me in the profit on these puts. I'm a little bit more cautious on the calls now out to Tuesday at 420, which is about a 1.5% up move. Still looking at about $2.30 credit there. And then I still have this longer dated one out at 427 for $2.30. So still playing it mostly neutral. Very, very slightly bullish. And then you can see the Russell making some money. It was slightly positive on the day. Overall, still neutral. Overall, still defensive, waiting for that relief rally. Let me know down in the comments section where you think markets are going to bounce. Are we still going to dump for several more days? Or are we getting to the bottom of this move? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.